Testing, testing. Can you hear me?
Hello. Okay. Hi. Good evening, everybody. Can you all hear and see me? You all can hear and see me. Don't mind type a one. Okay. Thank you so much, everybody. So today we're going to talk about beyond tariffs. We know that when Trump come up, he talked about tariffs. Then the market had crashed in April. But after so many ding dong, then suddenly the market is like still going up. So today we're going to talk about this. Okay, so before I start, this is a disclaimer. Okay, what we share with everyone is for knowledge and information only, as everyone the financial situation is different. So if you got any question, you can just post on the chat on that and we will try to answer to you. But before we talk about that, I just a refresher on the account. So cash plus account is usually the one that you want to trade US market. Okay. So that is, but do take note, the money market fund return have come down. Okay, so it's about less than 2% already. And actually, that's in line with how the market move. But surprisingly, the US money market fund still stay above 4%. Okay, so you can see the interest rate movement in Singapore, US dollar and Sing dollar, there's a bit difference in that. So that's something you need to take note on that. And also, but do take note, please don't convert your Sing dollar to US dollar to earn a high interest rate. As I think everyone aware, the US interest rate have come down. The US currency have come down against Sing dollar this year for quite a fair bit. Like just to share, today I just checked on one fund. In US dollar term, year to date, the index actually made 20%. But the fund in SGD term have made less than 10% return. So that is what a currency different can make to a fund returns. As a fund invest in purely US market, but we are getting back in Sing dollar term. So this is something you need to take note when it comes to investment on foreign market also. Okay, so if you do not have an account with us, you can just scan this QR code. Okay, and you can also join the community. Currently, it's still called Darren community, and this community, we don't provide market updates. We don't provide stock call. So just in case some of you think of stock call, but we mainly providing market updates on that. And we organize quarterly webinars, okay, for the community itself. For example, just over is August, we got this webinar. So if you're keen on this community, you can just click on this link. Currently, we plan to do quarterly webinar for this community, but if the number of people go up, then we may increase the frequency to more. Okay, so that is all for me to kickstart the thing, and I'll get Chumi to start first to talk about the US market update first.
You
Okay,
started
Chumi?
recording, right?
Yes.
You need to let me co-host, otherwise I cannot.
You already co-host.
All right. Okay. Good. Sorry, I haven't checked detail on this. Where is it? Okay. Good evening, everyone. Let's see. Can you see my screen? Just in case. Just trying coming out. I think I have a bit of technical issue on my earpiece, so wireless earpiece cannot connect. So I'm gonna use a wired one. Let me know whether it's too soft or I need to voice up a bit. Type of one if the voice is okay, and if not, then I will try to speak louder. Okay, let's see. I'm trying to see my chat. Sometimes when this thing turn on to two screen, I always have these challenges. Give me a minute. Okay. So today I'm gonna let's see, the chat is here. Let's see. Okay. Good evening, everyone. Okay. 6 more. Okay, good. Okay, there's quite a few topics today. I try to provide a high-level overview, but yet it turns out to be almost like 40 slides on here. In fact, I took out quite a bit of things too because there's quite a bit of detail that will bore you guys, so I try to keep it relevant. Okay, as usual, I'm going to start with market overview, US, then we'll cover about the US tariff, how is it progressing. Then we have Genius, Big Beautiful, the egg, and the stablecoin implication, also the market valuation and potential headwinds that I think, and then of course, as usual, what to look out for. Okay, without delay, let me just start the usual disclaimer. A lot of this is I gather from the various sources, research on myself, and certainly a personal point of view. No indication of any specific area to invest or specific stock to move on. In fact, today I will not bring up any particular one or two stocks to talk about it. I kind of more touch on the macro view. So please, if you need more information, because every individual has their different investment objective and financial situation, we will need to talk to individual in order to assess more appropriately. Okay. Without delay, let me jump to the first topic, which is basically the market update, market overview. This was last July 18th. We seems to see that it's coming down, but actually, the last 1 month, actually since 18 July until last week, 15th of August, it has been going up. It has been doing quite okay. In fact, Dow almost hit the all-time high. But it didn't make it. And today, I think looks like market is not going to do very well. I see that the US future is down. In fact, Friday, US future closed down, but this morning it was up. I just checked briefly. I saw that it's down again. So we have the big Russia and US meeting, and then of course there's this Ukraine and the EU people meeting Trump today. If I'm not wrong, is this evening or this early morning. They're going to have another meeting to talk about their Ukraine situation. I'm not sure what is going to happen, but basically seems to have triggered a little bit of nervousness in the future. But if I look at the market trend of the current indices, it's still quite positive, cross up, still above 50. Although the volume is a bit low, but the overall is still kind of positive moving forward. But we still have to be cautious because it looks like a double or almost triple top. So there is still risk that we need to be careful about. Okay. Next is the what do you call it? The other area on Nasdaq. Nasdaq, this was last month, is continue to go up, and as usual, sorry, I accidentally clicked the thing down. Okay, down. Okay, down. Okay, Nasdaq went up further. In fact, it continued to hit new high, new high, new high, which is good. Everyone loves when the market is up. However, I noticed that it's kind of losing a little bit of the movement is not as fast, and the volume is also kind of thinning down. You can see that this line is a moving average is coming down. This may not be accurate because in the previous month there was some error on this particular platform that I pulled the data. But again, it's still crossing up, still a positive trend. It's still above 50 and close to 70. So Nasdaq as itself is still looking good. Later I will touch on Magnificent Seven, whether there is any issue on that. So from a big indices, it looks reasonable. It looks positive, but yet, sometimes macro devil is in the detail, and this might be driven by a few stocks that is kind of pushing it up. So the other one is the S&P 500. So the more the stocks they have on the indices, it gives a better view or better feel of the market. Dow Jones is only 30 index, 30 key traditional company. Nasdaq is, I use a composite, which is 100 of the more tech savvy or tech heavy company. S&P is 500 company, 500 the top US company. So typically, the more company, you will get a better feel of the market itself. So this was last month, and this month it continued to move up, very similar to our Nasdaq. And as you can see, it came down a bit initially somewhere late July, as there was concern about some of the latest CPI data or some job data and all things, but it still continue to climb up. Again, very similar. The volume is not really that heavy. There's a bit of cross up and cross down here. So again, we can see that this pattern of coming down, there's one, is it a double top or is it going to continue to push higher? We do not know. But so far, the momentum is still there. It's still positive of MACD and all things. So, and the RSI is still positive. So from a macro perspective, looks okay, macro, okay? But again, the devil is in the detail. So if I go into the Magnificent Seven tech, this has been the trillion-dollar company. NVIDIA hit 4 trillion, and Microsoft is also very big. Meta also is coming up very strongly. If you notice that this from last update in July 18 or July 15, depending on which day you cut, it has been moving up. NVIDIA was a bit down, but later on it came down, went up. So it's still quite strong, I would say, because especially after Jensen Huang went to China and he get an approval of the H20 chip to be sold to China. Of course, there's also other requirement. I think there was additional 15% they have to tax on to pay to the government. So a very interesting arrangement that he has. But again, this is still helping the AI, still powering up the thing. Meta has been also a lot of news about their AI. They have invested heavily. Again, all these companies are heavily trying to push ahead to be the forerunner of AI. Google too. Google has been coming up since July, has been coming up. The Tesla, or rather Apple, so Apple has gone up also lately in early August. So overall, the tech stock has been helping the indices, I would say, the 7 key tech stock. Even Tesla, though, has gone out and came down. It was initially struggling, but later on it has broke above the July last update. So looks like most tech stock are still pushing it up. Again, this have to be caution. Again, I always look at it on with a filter on my eyes. Is that when tech stock, these big tech stock are heavy on ETF, are heavy on the fund manager. Of course, people will continue to buy into those and continue to push higher because there's a lot of money going into it and continue to move up. But one area I notice is their volume is coming down. The total, I mean, this is okay. This is the same as the Nasdaq volume is coming down. So we have to be careful if we want to really study. Maybe have to go to individual stock. In fact, I look at some of the stock, NVIDIA and Meta. The volume is not very a lot higher. So it's quite interesting that hey, there's something that it's an institution to push it up and get retail excited to move in. So we don't want to be the suckers to be the last one to hold a high expensive thing, but yet we also like to eat some lunch when it's moving up. So I think that's where we need to balance our risk and our reward. Okay, so that's a bit of Magnificent Seven. And going next, US Treasury. This is always the area that I like to watch, where because the bond price is determined by the 10-year U. And interestingly, last month when I presented it, it was a time where I think it crosses it's continued to be above the resistance level. I call it here at the 4.318%. However, I think late July, I think it started to subside. Okay, or actually early August, it hit a low of 4.185. This is the lowest point at here, 4.185. So late July to early August is kind of dipped down, which is good for people who holding bond because the bond price will go up. Of course, the yield will come down, but the bond price will go up. But lately after that, it start to creep up. Yeah, it came down a bit and it continued to creep up. yes, last Friday it actually break that resistance line I draw. Again, this is just anyone can draw a resistance line. Based on the previous low and or high, I draw a resistance line. So because of the triangular pattern, I thought it will continue to stay below, but it seems to be testing. Today, this early, about 5 o'clock, I was checking, it's about 4.299. So it's climbing up, but whether it will hold below the resistance to show that the yield will not be jumping too high. And of course, the Fed rumors about Fed rate cut will also impact it. Okay, when the rate cut, typically this thing will come down. But it's a little bit different from the Fed rate. Is more on the interbank, the current borrowing rate and all those things. This thing is 10 years. That means if you hold this a bond for 10 years, what is the expected return you want to get? In the past, it's very low, but the last 2 years, it has gone up to almost 5% and then came down. So the lower it is more beneficial for US Treasury. Because imagine I am the Treasury, I'm issuing bond. I would like to give you interest as slow as possible. But if it stay high at 4.299, 4.3, or even at 3.7, 3.8, it's still painful for me. It's best during the financial crisis, post-financial crisis, is as low as 2% or 1%. That's their favorite, okay? But that's why I look at this trend to see where are we heading for, okay? Again, just an observation that it seems to be creeping up. The other area I check on is the balance sheet of Fed. So this is kind of the case where when there's a liquidity issue, example during the signature bank issue, they will have to pump money into the system in order to create that. There is another way they pump money. Actually, I didn't include in today's presentation because it's a little bit technical. It's called a special vehicle to borrow, to lend money to the bank. They triggered that after the signature bank, but apparently they have discontinued. But it's also an area to help the US manage their liquidity in the market. So the other area to watch is also the kind of interbank interest rate, whether they have anything that like our CTC voucher. It's not really a CTC voucher. This is more like I'm the banker, central banker. I created a special instrument or investment instrument where during that time, why Signature Bank collapsed is because they were holding a lot of very low interest rate US 10-year what they call it bond. When the interest rate went up, their bond price dropped tremendously to like 20, 30%, or even 40%. So what happened is your asset value in the bank, that means your bank hold, let's say, a trillion or maybe the $100 billion of the bond. You have to revalue it at the 30% lower. Then you will be below the reserve ratio. Then you have to top it up. That's why the bank can collapse, because they don't have enough to cover it. So what this vehicle they did is, the central bank allowed them to to use their holding of the bond 10-year at the face value. That means I don't use the current market value. That means if it's $100, it's $100. It's not based on a market value of $70. So it's a little bit of a special instrument. I wouldn't call it CDC voucher, but they allowed that to ensure it will not collapse. But I didn't do this update on with this particular instrument because I think the last I heard is discontinued. But this is the way the financial innovation on how to avoid some of these things. But the other area I look at is whether the bank or the Federal Reserve allow money to go in. So this is where you, instead of QT, which is current period of tightening, they put money back to the system. Okay. That means you buy back the bond. Last year until this year, there has been a lot more of this small incremental buy. So they are monitoring the market very closely and quickly and ensure that it do not have any liquidity crisis. So even as close as last week, they did another QE. And July 9, they also did another QE. So that's quite a common, quite almost every month they do a little bit, a little bit, a little bit to help ensure that the market do not run into without cash. Yeah, the reverse repo purchase is another area that we can look at, but this time around I didn't go into the detail on this area because we want to focus on tariff and all things. Okay. Oh, I use 17 minutes already. I better speed up. Okay, US dollar index. Again, the US dollar index has been kind of a little bit of it overall, I would say it's still weak, but surprisingly, last month there was a little bit of pick it up since our, I think around July mid time we were talking about it, and it came down and it picked up again, but it's still kind of on a downtrend. You look at the 20 days moving average going up and start coming down again. So I would say because of the amount of deficit and the printing of money, Mr. Trump wanted to lower tax, which means that you will collect less tax revenue. Of course, he's trying to use tariff to cover some of the tax revenue. But the thing is that that will create a bit more need to print more money. So means that people are concerned about this is relative. US dollar index is always between currency to currency. There are a few big pairs like US dollar to euro, US dollar to Swiss franc, and US dollar to Japanese yen, and the few currency. So if the other currency strengthen against it and all thing, that means the US dollar index will come down. Last few round, it was quite a bit on the Japanese yen, kind of appreciating against it. And that's kind of also the Mr. Trump's wanted to push the other country to appreciate the currency to make their currency cheaper so they can be better for manufacturing. So there's a little bit of that global manipulation that he's doing. Okay. Okay, that's kind of a quick one market overview. I didn't know it takes 90 minutes. Okay. US tariff success. Any guess where we are now? Is it a success or not get success? Maybe anyone want to just type success, no success, one for success, zero for no success, or is in between? Well, I guess, oh, there's one success for USA. Yeah, I guess that's true. Half, half, yeah. So I would say there is certain success. If you look at the revenue they pick up, it's definitely significant. You can see there's a big jump, right? The 27.7 billion revenue reached in July. So wow, I mean, the last few months also quite a significant increase. But the deficit also is growing at much higher number. You have a right question. Who actually pays for it? So I will cover on that too. Actually, everyone knows that, or there is a study. I wasn't able to extract a report that says exactly, but there was analyst that says, although there is a good revenue coming in, a lot of this is currently half absorbed, or not half, I would say 15% only passed on to consumer, or to that extent. The other rest is still being buffered in that, 15% is passed on to consumer. Yeah, 15% is actually paid by the exporter. That means, the Trump wanted to push this tariff price up so that the exporter have to absorb the tariff. But the truth is only 15% is absorbed by the exporter on average, and it could be lower. Okay. And you don't see that being, because he's pushing a lot of country to absorb it, and I was saying, of course, there's a lot of sideline discussion. But again, uh, 27 billion gain in revenue, but 291 billion in deficit. That's only less than 10%. So you still heavily indebted deficit. That's the problem. Um, um, and if you look at this deficit, it's also interesting that probably you may have stopped China from exporting to you a lot more, but there is also transshipment or other moving a factory to other places like in Mexico, Brazil, Canada, other area that also have or others ASEAN country that can contributed to some of this 291 billion. Okay, so that's kind of a picture that, are you sure that small drop in of money, it can help his big deficit and also his big debt issue. But I feel that the tariff is only a tool for their negotiation because there has been, side discussion, one-on-one bilateral discussion, and a few things that we need to watch is that like Japan or Korea or Taiwan or ASEAN country, I know, Thailand, Vietnam, and Indonesia. On average, I think ASEAN country has been slammed 19% on average. I think Singapore is 10%, if I remember. It's not reported, but they basically they are what is trying to use this is a negotiation to force smaller country to absorb as well as to buy their debts in a way. Hey, you guys better buy my debt because I'm gonna load you with a certain thing. And it's also to push more nation to open up their capital market. What's the strength of the US economy, US or Western economy? Is their financial innovation, financial market. And that's where when you open up your capital market, uh, uh, the 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 1997 Asian financial crisis is a classic case of George Soros use it as a way to play with the forex and crash your market and buy your asset at a very cheap price. So I think that's where people learn from it. ASEAN is also become more careful. But one of the painful one is, of course, I think not mentioned in here because there's too many slides. Taiwan has been slammed quite a lot they committed on their TSMC going to US to invest new plant and everything, but they still slam with a very high tariff. I think it's 25% plus also reciprocal tariff for semiconductor. So it's a way to bully the small nation to get you to buy their thing. Even probably they will not never announce. It's like in 2008 financial crisis, talking to some private banker, I heard that there is a situation where even Temasek will have to abide to certain US needs to buy their stocks to help them tide through the difficult time. And then, of course, later on, they have to liquidate at a may not be a preferential price and all things. So those are the situations where the big bully can actually push some of these things. So it's not so simple. The world is a lot more complex than that. But again, this Mr. Trump is like, I am the emperor of the world. I can do whatever I like. So that's why the unpredictability of him, and he's causing a little bit of pain in everywhere. But as you can see that he bullied the small guy, but the big guy like China, to some extent, he also know that it will hit any high cost like import from China may also hit his CPI. So he's also very careful. He didn't blindly do it. He actually extended the trans by another 90 days. So it actually softened the impact on his CPI. So he's a very smart guy. To be honest, I feel that he might be temperamental, emotion, a little bit unpredictable, but he's a brilliant guy. The fact that he came out with or his team came out with the Genius Act, big, beautiful, act and the stable coin, it's a way to mute the world for his own US requirement. So he's not stupid. He's very smart. That's kind of my take. You can see that however, even though the China was delayed and delayed, so you can see that the CPM may not have moved up partly because the trends keep moving. Remember, it started in April delayed to August now pushed to November, and of course, certain country has been impacted. The good news is, of course, the oil price has been kind of staying very low. That helped the what they call it, the main bulk of the CPI, which is the vehicle transportation cost. and also even the electricity, because oil generate electricity, and that is also helping the room rate. That means your room rental from China, from US is not going up as fast. So all these are interrelated, but you can see that it's like hovering around there. And of course, less food and energy, there is a little bit of creeping up already. Okay, so that's kind of he's a very smart guy. He knows what he's doing. Okay, but we shall see whether the CPI will be impacted. Okay. The other one, we look at PPI. Okay, PPI is a production price index, which is basically normally is a more forward indicator. And I pull out this from another what they call blogger and video and all thing that helps to get gather about the performance and all. You can notice that the PPI is always leading the CPI. It always go up faster earlier than the CPI. Okay, and it came down first before the CPI came down. So a CPI is always a lagging indicator. Because what happened is raw material come in, it will impact the production costs. And I think Mr. Trump imposed certain aluminum, steel tariff and all things. Those does have an impact. What is showing is moving up, okay, and likely is going to drag CPI out. Okay, reason why CPI has not been moving up as fast because inventory helps cushion costs. Sometimes the big corporation have inventory and they have to digest this inventory, or they limit the buying of the more expensive, and they wait for the clarity before they buy. So you remember there was from April they delayed a bit or to August on a lot of the tariff, and during that period there's also a quick rush to stock up. Okay, so all this is going to help them for a while until probably up as good as a whole Q3, maybe into Q4. Then we will see some of the higher price coming in, and higher price may also twist consumption. If it's too expensive, people cut the consumption. So that's kind of the situation I see as likely causing the problem in here. Okay, again, this is my view. You know, who pays for Trump tariff? I guess I mentioned earlier, 15% maybe by the exporter. The rest, to some extent, maybe the importer portion of it, a big portion currently because they still have inventory to absorb, and a smaller portion into the consumer. But there will be time when the old cheaper inventory run out and you have to pass on. And Nike has just recently announced that they're going to pass on the price increase to the consumer. So it's going to come in. It's just a question of when, not why. Okay. So the other major impact on some last 2 weeks ago when there's a big index drop was because of non-farm payroll showing some weakness. What are their weakness is there's a huge revision down. More than 90% of the last 2 months job was revised down. That's why Trump fired the chief of Bureau of Labor Statistics there. You don't know the number, so you tell lie and all that. But the truth is, we know there is always a true lie, there's a white lie, and there's a statistical lie. It's how you play with the number, okay? So the scary part about this non-farm payroll job, if it's not growing above 100,000, usually in the US market, above 100,000 is a good benchmark where the economy are more stable. So the last number was only 73,000, okay? So that's where people feel a little bit panicky. But of course, with the Q2 earning result came in, some of the tech stock are doing very well. Everyone get excited again. So we, investor are very, what do you call it, goldfish memory. They forgot already. So they move on, and and get excited about the potential upside again. Again, that's kind of the situation. But again, I would say be cautious when this type of job report showing that is kind of weakening. And of course, now he changes the chief. Is the number trustworthy? Is the number, can we trust the number now? We do not know, because it looks like Mr. Trump as an emperor of the world, he want to do what he like to do. Uh, Still Trump's first year as a president, even though it may seem like very long. Yeah, yeah, that's true. But he act like a big boss, you see. Okay, so changing gear, so that's a bit of tariff. So tariff in summary, I would say there's little impact on CPI, but there is some sign the PPI is kicking in. There's some sign job is being affected now. People maybe there was quite a few the big what do you call it headcount cut on the corporate is still not coming in yet because there are people, but it's happening, but not as huge. Some of these numbers could be because of the government Dodge team. You know the Dodge, right? Mr. Elon Musk came in, cut a lot of government job. That number could be the one trigger from there. Not so much on the private company, okay? But the private company will start feeling the pinch and may have to cut people. So that's a scary part in future, okay? Okay, next question is Genius BB and stablecoin. What is the implication? What are the benefits that they will get? I think I covered a bit last month, but I'm sure some of you may remember, but consider the time is limited, I will just jump to the detail. So this was last July. I updated. There is this the even Ripple. Ripple is actually a company plus they also a coin that is being used and because it's quite I'm still learning what is this Ripple coin, but apparently it's getting traction in there too. They even eyeing to file as a for apply for U.S. National Bank. That was last month. I mentioned all this. So what has happened along the way to this up to today? One of the key area was BNY and Goldman Sachs start to tokenize effort. So they join force trying to transform a 7.1 trillion money market industry with digital tokens. So you can see that don't underestimate the implication of this what they call it tokenized or stablecoin because it indirectly will help US government to sell their US debt because the stablecoin and the Genius Act has there's another act I can't remember what's the name of the act. It's called BCOD Act or something like that that says that you have to back it with US debt, which is US Treasury bond. So in a way, it created demand for US Treasury. The other latest news is also the yesterday, I think yesterday, yeah, over the weekend, Fed to scrap a program devoted to policing banks on crypto and fintech. So you can see a lot of the effort is to make it easier to have the crypto or stablecoin being in a new fintech. But that makes me very nervous during the time when 2008 financial crisis. The same thing happens is when you connect the dots, the big player is joining force to make money out of this new digital stablecoin direction. Okay. And it's very similar to the time when, what do you call it? Mortgage-backed security, MBS, if some of you has gone through the 2008 financial crisis, that was the trigger of the collapse or the great financial collapse during that time because they were so innovative. People mortgage, they package with a few of things, created another instrument, sell it to the corporate, sell it to the retailer, and then when one cannot pay the other one, it just collapsed. So this have a little bit of that. I can smell a little bit of that risk down there. So we do not know how it will progress, but I do I do take the stablecoin as a very smart way because it's much faster than SWIFT, which is the current system of transferring money. It also has a lot more. So cost is always important for corporation. Lower cost is definitely attractiveness to them, and they allow corporate to issue their own token, which in a way it also incentivize them to create their own currency to currency quicker transaction. So we do not know how it's going to progress, but I think it's a very smart way to use from a fiat US dollar debt into a digital US dollar debt. Very smart. Okay. So that's kind of the effort started in here already, Goldman Sachs, BNY. I'm sure a few companies like Walmart and a few companies already mentioned they have planned to do that already. This is a slide to show you that you can see that crypto market used to be very small, negligible. You see, 2017, sorry, 2017 is still nothing to say. You know, it's zero, close to zero. But what has happened the last 1 year? You look at the way it jumped. This is about less than 2 trillion in mid 2023, and about 24 is 2 trillion, but now it's 4 trillion. It double. So don't underestimate the impact of this crypto now. It's still not as big as the next big player like gold. Gold is about 23 trillion in market cap, but it's coming up very strong, very fast. So it's something to a force to reckon of, not something to ignore. Okay, so I feel that stablecoin or there will be certain coins still being used, but there's a lot more speculative one because you can see there's 17,380 cryptocurrency track. So there's many type of this. Silver, I didn't check the market cap. It's much smaller, I would say. Silver is also coming up. Yes, silver price is also going up. Silver is always lagging, but silver has gone up quite a bit. But yeah, so but I want to give you an idea that crypto is coming to be very big now too. And it's a force not to be forgotten. Of course, I've never traded in. I never really traded in this. I used to have coin hardcore just to play what is it, but I never really traded in this currency. So I don't have a slide on how to trade this currency. Okay. This is a quick summary of what's the benefit of stablecoin. As I mentioned, when the next crash will come? Oh, I hope I can tell you when. Then I will be the god already, man. No way I will be able to know that. Sorry to say that. I mean, there's many possibility, but okay. Let's come back to here. Benefit of stablecoin is see the low cost transaction, fast, cross-border payment, and financial inclusion. And this thing called DeFi. I have this friend who is into this crypto and all thing. That's where I learned quite a bit from him. Decentralized finance, the dark side and the good side, I would say. A lot of business try to use this to hide their money and all things sometimes using the Bitcoin, especially people want to the smart what they call it, the drug dealer and all things also used to be known to use a little crypto to do that. But I think the Genius Act drive demand for treasury as a backing for stablecoin. That's one key reason why US is pushing this forward and deregulating some of the control. So very clearly, they are trying to make the demand pick up for their US debt, I would say, to some extent. And how successful that will be depend on how other country and other corporation are agreeable to that, because people are so wary about your 10 years bond. Will it still be capital protected when you say, or although people, I would say it's very unlikely US will default on their debt, but there's still a risk down there. Okay, that's something that we just have to be aware of the implication. So this next slide is about giving you an idea of the US debt has hit 37 trillion. Okay, screen not showing. Is it? Oops, sorry. How come it's paused? Let me see. Okay, let me try again. Uh, Presentation. Wait, okay, share again. Thanks for telling me. Is it? It's okay. We love to crypto. What? Okay, sorry guys. Can you see the screen, or is it still blank to you guys? No, you can't see the screen. Oh, okay. Let me just stop sharing and then maybe try to do it again. Give me a minute, huh? I don't know what happened actually. Maybe I just use screen two. Okay, can you see the screen now? Yes, good, 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 good. Sorry about that delay. Okay, so back to what they call it, the US debt. It has hit 37 trillion, so it's still counting up. Okay, I noticed a few things in here is this year I think US is projected to have a 2 trillion gap because of their both their deficit as well as the budget they need to get for growing their, they want to cut their tax and they want to grow their in defense and all those things, their expense, even though they cut the social security or some of the poor area. But I think the gap is still about 2 trillion. Their interest rate, interest payment a year for the 37 trillion, that is about a trillion already now. So that's where you notice that they are trying to get their stable coin could be one avenue to get this debt to be more so sellable to other means. But I also noticed the other area is that if you look at this, this is their T-bill, which is the short term, like our T-bill, less than a year kind of thing. The July, the issuance of new debt is mainly short term. Yeah, I would say about 80% is short term. That is not a preferable route, partly because usually you like to have long-term debt so that you don't have to worry about the changes and all things. But you notice that the long-term debt has been kind of people are used to buying their short-term. I think internet connection is unstable. Oops, I hope things are okay. Sorry. But the other area is the US dollar is coming down. So this means that if the dollar is weak and your debt is still high and heavy, people may have worried about your credibility. Will they continue to erode their confidence about US debt and the stablecoin rollout? I mean, that's kind of the thing that we just have to be sensitive about. Uh, they're numb to debt. That's true. They just print because they have the reserve currency. Okay. But I think that's where the BRICS and the Southern Front are looking at bilateral trade agreement. A lot of trade has bypassed the US dollar shift payment system. And I think that's where they want to take back control to some extent. Okay. So market valuation and headwind. This is something that it's just some thought that I have about uh and also the what I gather from the market. So what you guys think is fair value or is good value or is too high value? One for fair, two for high. Anyone? One fair, two high. Okay, fair, fair. Okay, good. There's a good mix of different opinion. I like that. High value too. Okay. This is what I gather from various current market valuation. Thanks for putting your reply. US always over. Yeah. So US market seems overvalued. Okay, this is from this website, current market valuation. Of course, you have to pay to get in, but I managed to get some of the report through other means and all thing. High today, tomorrow is low, so it's fair. Haha, yeah, that's true. But I would say is overall, sorry. Overall, it's on the high side now, partly because the semi and the tech is driving quite a bit of AI and semi is driving quite a bit of the high valuation. And this average is also showing that it's already at the 2 sigma, 2 standard deviations high, strongly overvalued stage, which is make you, we have to be cautious. Doesn't mean that you may not continue to go up. You can see that here, this point, in the year 2000 Y2K bubble, it went all the way to almost 3 deviation. Okay, so we are moving to that direction. High, high, go higher. The black swan event. So maybe another signature bank kind of thing or another credit crisis or whatever is could drive the thing lower. So that's one indicator. The other one is called a Buffett indicator. Okay, Buffett indicator is also showing that on 8th of August is 221% ratio of market value to the GDP. So again, it's also overvalued. So that's kind of a gauge of the thing is on the high side. Okay. And the other area is look at what the rich people are doing or the guru is doing. Guru is holding a lot of cash. Okay. Guru is holding a lot of cash. Berkshire is holding a lot of cash. Cash position is huge or equivalent position. Does it mean that the market is still fair value to jump in, or we should be careful on what we are doing? Yes, this is Warren Buffett. He's kind of equivalent and all things. So what are the potential headwind? I'm reading a few of them. So again, this is just some data I pull out from some blogger and other places. So bear with it because the quality of some of the snapshot may not be as good. But you can pull the detail from some of this business. There's the ISM data is on a 9-month low. The cost of business is becoming a concern. There's the huge hope that there's a rate cut to help the cost of the business. Okay, the business is double whammy by the fact that the tariff will cause import cost of raw material higher, and then you have the higher cost of borrowing. So this is not good for business. In fact, there's quite a huge amount of bankruptcy in US too. Okay. That later we talk about United Health. I think okay, maybe a sideline. United Health is at a low point, so Buffett is very smart at buying at the lowest point, and of course they go in. I have not done a study on the United Health, so I can't comment too much. But even from a technical term, the downside risk versus the upside potential is there. Let's put it this way. Okay. Okay. Other headwind is retail. Retail sales is good, but not great in July. That was the kind of comment from the most recent retail number. Is sales up 0.5% during the month, but upward revision to the June activity suggests the consumer is on a footing headed. Okay, that's kind of positive side. However, I must say that if you look at the household supplies, price index is also going up. Okay. Cautious on the trajectory of spending in the second half amid a moderating job market. So as the job market get not as good, there may be a risk on whether can these retail sales continue to go up. So that's the comment out there. If you guys want to read, you can find this report in there. Again, this is kind of I gather. I see that is the domestic economy is still a big part of the US GDP. It's about 70%. Okay. Of their GDP come from domestic economy. So if the domestic economy slows down because retail sales slow down, retail service slow down, the overall GDP will come down. Okay, so price increase does cut consumption, but you need to look at the total value or the volume, which is coming down faster and all things. So those are the things that devil is on the detail. It's very hard to give all the information in 1 hour presentation, the maximum. I think, right, Mr. Warren Buffett see his final need with United Health. Somebody joking about it. Okay. So another potential headwind, I saw this report. I noticed that it's a very more statistical. They put what personal income, current dollar, there's the personal current trade transfer receipt and all things. It's kind of the total aggregated kind of consumption. It has been going up, but the last 12 months there has been some sign of slowing down. So again, this is not significant, but there's a bit of hitting the tip and coming down a little bit. So that's something to watch on it carefully. Okay. The other headwind, unemployment, as mentioned earlier, the overall unemployment rate has been hovering 4.2, which is still okay, but it's if you look at the line, it's hovering there, but looks like it's like okay, is it moving up? I'm not sure. So if the tariff impact the unemployment and the cost of borrowing increase, bankruptcy increase, the Dutch thing has happened already, but the private enterprise start to cut people. this may go up, and this may also impact the overall consumption, the GDP of US. Okay, that's kind of the headwind I see. Okay, again, the other headwind, and this was an interesting, I think yesterday or the day before that, I saw this report only. It says the AI spending boom is boosting the US GDP and potentially hiding looming problems. Yeah, it's true because there's so much spending on this, is creating the hypes about it and all the how long can it last and all the thing, how long will it continue to have? I think this is where it's interesting. We are in a very what do you call it? Uh, pivot point, I would say. Last month, I presented this thing. I say US and China are fighting for dominance on AI. Okay. They have their own Huawei, NVIDIA trying to control the whole thing. There's another chip called HM, something chip, another type of chip that also been used for something that is a backend AI. So there's a lot of things that's pushing. And China even say cautious tech. China cautions tech firm over NVIDIA H20 because they claim that there may be some back-end thing that can track you, can stop the whole usage and all things. So that you can see the demand of US thing may be affected by the government propaganda too. So all this is making this competition between these two G2, I would call it the two big boy, is going to intensify. Will AI spending continue to be in US and China and to be able to milk the benefit? Of course, there will be some benefit. The question is how fast is the benefit and how much money you can still burn. Will this burning slow down, and that will also affect the economy? Okay. Again, this is sorry, I don't know about media tech. Okay. Potential headwind is stablecoin challenger. This one I don't have any nice picture, but I just pull out something like in Europe, they already mentioned very clearly in one of the notes that they have is that stablecoin are reshaping the global finance with the US dollar at the helm. Without a strategic response, European monetary sovereignty and the financial stability could erode. So every country is aware stablecoin could be a way to rob the world. Okay, so everyone needs to take their action to protect their own country too. Uh, uh, so these are the things that will be something that people are putting effort to also create their own form of stablecoin. Even Hong Kong has started to work on those rules explained and everything. So that's kind of the situation that is happening down here now. Again, this is the other things that is stablecoin may be a great smart way of the US, but is everyone buying it? Is everyone cautious about what you're trying to do to rob the world? And what are the alternative? What are the solution behind avoiding being robbed or being tricked by you guys? So those are the things that is happening in the background. Okay. Uh, okay. White House want to buy Intel. This one I don't have enough news, so I wouldn't be able to say anything. But if you look at the way they want to make sure that they have a tech company that can be a leader in the market, the way they sell cheap uh, steel TSMC into US, they just want to make sure the semi-tech is in their hand. Okay, the semi-tech is in their hand, so they will do all means to do that. Okay, um, uh, okay, so that's kind of the situation in Intel. Likely is their own homegrown kids. They want to make sure that they are successful. So I think the US government already uh, un, uh, unusually invested in a rare earth company, okay, to restart the rare earth in the US industry. I'm not surprised they will do the same thing to pump money to Intel to make sure that they go up to be a contender, to be a leader. Okay, so that's kind of my take. I don't know on how is stablecoin different from other crypto? Other crypto is based on blockchain, the algorithm and all this kind of thing. But stablecoin is backed by a fiat currency or fiat treasury. So that's the fundamental difference, and it's kind of I would say a lot of other crypto is more a complete decentralized finance through their blockchain and other things. So there's a lot unknown inside there. So it's not so easy, not a simple comparison there. Yeah, correct. USDC is backed by US dollar and audited, but don't forget during the Enron situation many years ago about electricity, Enron went bankrupt and all thing. All their books looks good, they are back, but then in the end there was nothing in there. So people can play the numbers too. Okay. So what to look out? Any guess? Well, I guess run out of time. I must jump now. So I will always watch the non-farm payroll. This is the latest number, which is why I mentioned about 73,000. And the PCE, core PCE, where are we moving up or is it against forecast? This is one area that I'll continue to watch very closely because the non-farm payroll give you idea of job employment. Is it progressing, which can tie to the jobless rate and all thing. While the core PCI can give insight of the main, what they call it, inflationary impact. Okay. And of course, the other thing I will watch out, Fed rate cut. There's a lot of saying that, wow, for September is going to have 92.1% chance of cutting down. That's a lot. And I think today or yesterday, I think the latest news is it may even cut cut 0.75%. There was some rumors about it. Okay, so those are going to create a little bit of the excitement down there. Okay. Again, whether it will happen, let's watch on September. That's one area they'll watch on. But the other area is the geopolitical situation. Of course, last Friday at Alaska, Mr. Trump meet with Mr. Putin. I think part of it is want to get his Nobel Prize Peace Award or whatever it is. There was some rumors about his intention or his interest, but of course they didn't have a final settlement or whatever it is, but there's some progress in there. But I must say that is not has been the world has not been as peaceful always. But the worrisome part I see is that the war is getting or the tension is getting closer and closer to us. I mean, last month we have this Thailand Cambodia border, right? I mean, the crashes and all those things. And recently, I think there has been a couple of boat incident and even the Seventh Fleet was having some frigate in their South China Sea. So don't forget, I think in the past presentation I mentioned before, a lot of time when US is worried about losing their power, they will create war. Okay, that's one thing that don't underestimate because they want war to create a need for their currency. Okay. And I took this picture, which is interesting. What do we do now in current situation? Okay, because Mr. Trump is like a gambler. Okay, this was a post in latest Economist copy. I find that there's so much uncertainty. There's too many unknown outcomes. So make investment more challenging. So I think risk management is the key. Never put all egg in one basket. Limit your individual investment. It's up to individual. Mine maybe at only 10%. Portfolio management. In fact, this is a kind of interesting rule. Even as a corporate, we always say no one customer more than 10% or 15% because you don't want to be held ransom by the customer. So similar mindset, you don't want to put too much investment into one stock or one fund or whatever it is. Portfolio management, you need to manage overall sector, industry, market, stocks, and everything. And I would say keep more cash for future opportunities. Look at what Warren Buffett is doing now. He's keeping a lot of cash, waiting for opportunity. So we learn from our guru, but don't just follow blindly. You need to understand their logic and make your own decision. I think that's my call out in such kind of current environment. Okay. There were a lot of questions about China and Hong Kong market. So I kind of put a few slides in there. One of them is China's stimulus plan. Okay, China started this announced this big building of world biggest hydropower dam. Okay, 1.2 trillion yuan project has broken ground in Tibet. Okay, that is going to be creating a lot of demand for construction related industry, whether cement or steel or whatever it is. So just use that as a logic when you look at this type of big project, it will create demand. Okay. The other thing I noticed is the China private sector also has gained more ground. In the past, it had been squeezed by state-owned industry, partly because of the fact that I think the government was getting uneasy after the Alibaba and financial and all thing. So the state-owned become a big part of the whole corporation gain and all thing. But lately it's cut to come back, which is good news. Okay, because the biggest employer of the population usually is their private enterprise, not the state-owned enterprise. Okay. And the other area we need to watch out is this Wang Huining is one of their major vice premier and all this thing, is talking about reform. And I think late August is their MPC standing committee meeting, which is late August. Will be interesting to see what is the outcome, what's their other stimulus that they have in there. The most recent South China Post also mentioned that there was a saying, let the rich spend, because they wanted to start to stir more, I think they start to loosen the rules about owning second property by the rich and all those things now. Okay, so they can see there's a lot of effort from China to spur the economy. Okay, and it's really one of my last slide now, finally. This is Hang Seng Index. This is A50. Of course, you can pick up CSI 300, but I just pick up A50. Both slides are showing that is a certain what do you call it, definitely a upwards trend, very similar to Dow, but more the fact that in September that was a major one that they let go a lot of stimulus and went up like crazy. But after that, it becomes stable. But recently, it started to creep up again, especially in the China side. Okay, so there seems to be in a positive momentum. But again, you need to pick industry, you need to pick the sector correctly. I wouldn't want to say what buy which stock or whatever it is, but that's kind of overview of what I think. I mentioned the dam is going to be built. What are the commodity they will use in there? Those are the sector that potentially will gain. And China is heavy on green energy. Is it over capacity or is it under capacity? China is heavily focused on tech, semi-tech, and a lot of AI related semi-tech has gone up. So these are the things that you need to understand their strategy, their intention, and what industry will benefit from it. So that's kind of I overrun. Okay, that's kind of cover some of the questions. Some people ask what industry to buy. I think what are the sector, how is the China market, how's the US market, how's the impact of tariff. I hope this gives you an overview, everything. Common prosperity in relation to its stock market. Common prosperity is not so much on the stock market. It's more ensuring everyone has a fair chance and share, I would say. So it's less capitalist thinking. So it's definitely not a trigger on that. But I think the February meeting, he meet with the tech sector chief and the key private enterprise chief is a sign that he knows that the private enterprise had to start coming in to innovate, because state-owned enterprise can never innovate faster than private. Okay, that's it. Thanks. Any more question? I think I answered most of that. All right. Over to Darren.
Elijah, you want to?
Oh, Elijah.
Okay. I think we answer most of them.
Sorry, I will run.
It's okay. Okay. There were some other questions sent in by you, which I will just pick up. Not too many, just a couple of them, and then I'll hand it to Darren. Simon, you can see my screen and hear me. Okay, same thing, disclaimer, anything I mention, please don't take it as financial advice. As I always say, it's supposed to be, financial advice is supposed to be tailored to your circumstances. There is no way I can tailor anything to your circumstances in a general setting. Okay, so I just thought that was interesting. Where should we put our savings for capital growth in the midst of the current market situation? Um, I I'm trying to understand this question here. I hope the person who asked this is here, but if you are saying park your savings for capital growth, I presume that you have allocated these savings to growing it, but you just haven't deployed it yet. If that's the case, then you can still live in a high yield saving account or in money market fund. I think those are fine. And that's of course depending on your view of the market that you want to invest in lah. So if you want to grow it, then I'll just say don't try to time the market. If you're not picking anything in particular, then you may actually just invest, but not go all in lah, because keep a little bit of dry powder. Like Chui mentioned, Buffett is keeping a bit of, actually not a bit, a lot of cash on the sidelines, right? But it doesn't mean he won't do something, like just that he isn't doing too much. So I think the same thing can be applied to us, is that we should always strive to do a little bit, don't try and time the market, just go in, but keep a little bit on the side in case opportunity presents itself. Okay, so I hope that answered the question. Someone, actually, I don't know what this question is about. Is this passive income means? Okay, I suppose if you're asking about what kind of passive income you can pick up, there's plenty. We actually talked about it last Ask Me Anything. But again, I just need to stress that a lot of times actually what we think is passive is not quite passive. For example, like property, you have to manage it, or you have to get a property agent to manage it, and then you will have to pay the property agent agent fee or something. So truly passive income requires no management and will just come into your bank account. Okay, so that is truly passive income. But if not, actually most people's idea of passive income would involve some kind of management. You cannot expect to build a stock portfolio and then leave it there and expect it will function all the way until you are no longer around. That's not going to happen, right? So that's what I want to say. Couple of questions about the banks. Actually, bank will continue up. DBS maybe, but UOB and OCBC may face some challenges in the coming months lah. Again, a lot depends on how the rate cuts move. So I would say DBS is well positioned. Not saying that UOB and OCBC are not, but DBS, as everyone has seen, has broken $50 recently. So I think there's a little bit of uptrend there. And in the very long run, the banks should still trend outwards because all of them are roughly in sync with each other. But DBS is pulling ahead. Let's see what OCBC and UOB will do to catch up. Okay. Okay, and then the last question here, what's the valuation or entry price for the three local banks, given the pullback post Q2 results? Okay, I'm just going to come out and say that I have restrictions on buying shares due to where my wife works, but and so my valuations are going to be very different from yours. But I'm just going to give a quick overview about what I think lah. So on here we can see the chart of the three banks in terms of the price book, and DBS is at its highest actually, at 2.13 times of book value. The other banks are of course high, but not too high. Right? They actually pulled back as the person asked the question mentioned. Then again, we can see the lows are also we're now at the lows. Okay, so it's on the high side. So just keep in mind the mean price book value. Okay, and we'll use that as a proxy. So if we look at the results of the banks, these are the general first half results. And then I think I will draw your attention to the book value of the banks. Okay, so 23 plus for DBS, about $13 for OCBC, and UOB is around 28. Okay, so interestingly, UOB is 28. It's actually higher than DBS lah, but we know which one is trading higher. Okay, so having said that, so if you take the mean price to book and multiply it by the current book value, you are going to get these numbers here. So DBS, which I know sounds crazy, you would expect to enter, or at least for me, I will not even look at it until it's close enough to this region. OCBC, UOB have a chance of coming back to these numbers soon because, as I said, they are not trading at 2.1 times of book value. So OCBC, UOB may be candidates for entry if there is further pullback. DBS, I wouldn't buy it now. Even if I could, I'm actually banned from buying DBS. But even if I could, I would not buy it right now because it's just way too high in my view. But then again, that's what makes it interesting because other people may still think that it's worth buying, right? There's no right or wrong. If I were to buy, it means someone want to sell to me. So why did that person let go, right? And then here I am trying to buy it. Why am I buying when someone else is letting go? So that's what makes it a little bit interesting to analyze. I would say those are Okay, I wouldn't say these are my values. Okay, they're still not quite my values, but I would say you can use these numbers as a good gauge to where you can enter with some margin of safety. Okay, so at least you won't feel so bad if the price continue dropping. It won't drop too much more in a typical scenario, unless of course there's a really bad market crash lah, in which case I would say that's opportunity lah for the banks. Okay. Yeah, so that's what I want to say. That's the last of the questions. I think now it's back to Darren. Darren?
Thank you, Elijah.
Yep, thanks
Okay.
everyone.
So there is a lot of questions actually asked about REITs. Okay. But maybe on especially the tariffs, I think for the past 2 months, actually I talked about 4 REITs webinar, 4 REITs topic webinar. I don't know how many of you attended that. Okay. So, but in general, how does tariffs affect the REITs? Actually, we know that interest rate is more related to REITs rather than the tariffs on aspect. Okay. This is a REIT in Singapore, but there's one REIT I didn't put in is the latest data center REITs, entity REITs that's just listed. Okay, so I didn't put in because you see I don't look at new REITs also. So if you ask me, and REITs have been actually not really performing compared to the banks. You look at DBS Bank, you look at SGX also moving very fast, ST Engineering also moving fast, and you'll be surprised Comfort Delgro have actually recovered quite a fair bit. But you look at all the REITs are not really performing in that aspect. Okay. But actually for me, tariffs, what is the impact to the REITs? Actually, it's more of whether, do take note, these REITs are listed in Singapore. Okay. But you also need to know that where are their property located. That's more crucial in looking at the risk as a first perspective on that. So this one you can take from SGX. This is to tell you that where are the property located. In, for example, of course, some of the names like CapitaLand China Trust, that one is clear cut, it's 100% in China. Okay, that one, the name will tell you. But for example, let's look at Federal Logistics and Commercial Trust. Okay, where is their property located? Actually, they only have 13% exposure to Singapore. So in fact, about 50% is in Australia, then followed by UK and Europe. So practically this REIT is Australia and Europe properties rather than the Singapore property. So you want to look at how the tariff effect is to look at how would that affect Australia and Europe, and not look at how it affects Singapore to decide whether you want to buy this REIT or not. So location is crucial, that you need to know their weightage on that. And some of the good REITs, for example, like Mapletree REITs, they have not been performing so well, especially for example like Mapletree Logistics Trust. Why is that so? Is that they got a big exposure in China and Hong Kong. And we know China and Hong Kong is not doing good, and with the tariffs and fighting all this around, and China property market come into play. So thus, when you look at REITs as a whole, and one of the key factor you need to consider is where are their property located. And to be on the safer side, if you want to invest in REITs, okay, I would say that look for REITs that have a high concentration on Singapore. Okay, look at REITs. Not only is interest rate will definitely come down, and actually tariff impact to Singapore is not really that great compared to the rest. We are one of the country that being impacted less, 10% only. Okay, so look for REITs that have a high concentration of property in Singapore. And also one thing is Singapore property value don't really drop, only appreciate over time. And thus, you are looking for cash flow and stability, and also you are looking for dividends in currency, Sing dollar terms. Those REITs have property in Singapore, you don't expose yourself to Forex thing, especially Singapore, SGD is remain very strong. US dollar have dropped against Sing dollars. Not only US dollar dropped against Sing dollar, Aussie also dropped against Sing dollar, pound also dropped, ringgit also drop, renminbi also drop. So if your REITs, the property are all in overseas and it convert back to Sing dollars, So it is challenging for the risk manager. So that is one of the key take. If you want to look at that aspect, then try to have a more Singapore focused risk in your portfolio if you want to have more stability on that. Okay, and just some side thing is tomorrow I'll talk about this one. I think this is the second round. I'm going to talk about maple tree. I have done that last week. For those who have missed it, tomorrow I'm going to talk about the three maple tree REITs on that in detail, because like today I don't have time to talk. I will have more than 1 hour just to talk about three REITs. So you're keen on that, you can just sign up for this. I think I've not posted this link out, but I'll post it in the community. For those that are in the community, I think you're able to get the link. If not, you can look at the link. I just type in the chat. You can just join this community on that. Okay. And Kelvin talked about Suntec. Actually, Suntec is a REIT I don't really like. Okay. Okay. And also got a risk analysis course. If you're keen on that, you can also sign up on this. But this one you can check with me separately on that. Okay. And this is a community where I talk about it. So we also do quarterly webinars for the community. As a community have actually grown in significant size, we can able to do quarterly webinar and still got quite a good numbers that show up for the webinar. So, but if the community continue to grow, as WhatsApp allow, I think up to 5,000 members for a community. So if the community are able to go, we may able even to do standalone monthly webinar for the community. No need to market. So if you're keen on that, you can just join on this link. And lastly, if you got any question, as what we always mentioned, everyone, the financial situation is different. Okay, so do your own due diligence on that. And if you really need advice, you can talk to us separately on that. Okay. Because we always try to we all overrun on that. So today I try to keep it on time so that we don't overrun, because some of you had feedback. Okay, to us. And also that we have done this Ask Me Anything webinar for more than over a year. We do it on a monthly basis. So if you got any topic, you have to let us know so that we can incorporate into our Ask Me webinar session. And just some heads up, next month, the Ask Me webinar will be is on the 15th, Elijah, is 15th of September, right? Okay, we have
15.
the date.
Yes,
Okay.
15 September.
Yes, and we'll talk about unit trust and ETFs. Okay, so just lock this date down. 15th of September, we'll talk about unit trust and ETF. And of course, ETF will mainly focus on the US ETF, and of course, some of Singapore ETF. And unit trust, of course, will be a global unit trust. So you got any question on that, you can hold your question on that and wait for us next month. And we will talk about that on that. Okay, we'll send out the link for the registration. I think that one will be in September. Okay. And any more question? Okay. I think we have tried to answer most of the question already. Okay. Anyone got any more further question? Or Chung or Elijah, you all got anything to add before we end today's session?
Not really.
Okay.
Nope.
Okay, Ken. So if not, we'll thanks everyone for supporting us, and we hope to see you again next month. Okay, in our monthly Ask Me webinar sessions. Thank you, everybody. Good night.
Recording stop.